Recently, the Minister for Finance delivered the 2026 budget and economic policy of the government for the year 2026 to Parliament. And as always expected, whenever the budget is read, it generates a whole lot of conversation in the media. And of course, there's been a whole lot of politics around it too. So, as my interest is in real estate, I've been able to pick some highlights from the budget that I believe will have an impact on the real estate industry that I want to share with you.
I have the honor and privilege to present to this House the budget statement and economic policy of government for the 2026 financial year.
First of all, what do I even mean by the real estate industry? So, by the real estate industry, I'm referring to economic activities that revolve around one, land and the land market in general, two, property development or real estate development and the construction industry, three, real estate financing like mortgages, then four, professional services like property valuation, architecture, quantity surveying, and what have you. So, this video has been structured this way. So first, I'll talk about the state of Ghana's economy and how it relates to the real estate industry. Then secondly, we'll talk about some government policies, some policies the minister announced in the budget statement that I believe have some impact on the real estate industry. So the state of the economy is viewed through or assessed through what you call macroeconomic indicators. And so far, the story has been a positive one. The government has been widely praised for improving the economy compared to previous years. So, for instance, if you take GDP, so GDP is like the value of the entire economy. So, according to the budget, as the minister read, for the first half of 2025, this year, the economy, that's the GDP, grew by 6.3%. So, note that GDP figures are released quarterly. And so the data available as at the time the budget was read was for the first half of the year 2025. Now the first two quarters of the year. If you compare this 6.3% growth to last year, the same period last year, 2024, first half of 2024, GDP grew by 5.1%. And this shows improvement or progress, right? Now, for the year 2025, the government projected that GDP will grow by 4%. When the minister read the 2025 budget earlier this year, he projected that GDP will grow by 4%. So this means that the 6.3% that has been recorded for the first half of the year shows that now as at now, the economy has outperformed its own targets. For the year 2026, the minister announced that they are projecting the economy or the GDP to grow by 4.8%. So let's wait and see how that pans out. But what does this mean for the real estate industry? So a growing economy or a buoyant economy impacts all sectors of the economy or all industries in the economy. And of course, it includes the real estate industry. So going forward, we should expect things like construction, etc., to grow. The next macroeconomic indicator I'll talk about is inflation. So inflation is the general rise in the prices of goods and services. And at the time the budget was read, the minister announced that as at October, so the data available was for October when the budget was read. As at October, the inflation stood at 8%. So if you compare this to earlier this year, January 2025, where inflation was above 8%, 20%, it means that the inflation has declined sharply over the period of the year. Now, in the year 2025, for the whole year, when the minister read the budget, 2025 budget earlier this year, he projected that by the end of the year, inflation will be around 11.9%. This means that as at October, the 8% recorded shows that the government has outperformed its own inflation targets, which is another positive again. Now, for the year 2026, the government is projecting that inflation will hover around 8% plus or minus 2. Now let's wait to see how that also pans out. But what does this low inflation figures mean for the real estate industry? So things like rent prices, and also building materials, which are relevant to the real estate industry, it means that they will increase but at a slower pace. So note that low inflation does not mean prices are falling. What it means is that prices are rising but at a slower pace compared to before. Also, low inflation signals a healthy and stable economy, and healthy and stable economies attract are conducive for investment in general, and of course, it includes real estate investment. So, going forward, when when investors expect the economy to stabilize, we should expect more real estate investment in the economy. The next indicator, macroeconomic indicator I'll talk about is interest rates. So interest rates are influenced by several factors in the economy. One of them is treasury bill rates. So if you've been following the treasury bill news, if you've been following the news, or if you are someone who invests in treasury bills, you may have noticed that in the period of this year, treasury bill rates has declined sharply. So earlier this year, treasury bill rates were going for around 30% per annum across the various treasury bills, the 91-day, 182-day, and the rest. Now, as at November, the treasury bill rates are hovering around 10%, 11%, which shows a sharp decline, as I said. Then also other factors that influence interest rates is a monetary policy rate. Again, if you've been following the news, you may have noticed that the monetary policy rate has been trending downwards whenever the Bank of Ghana announces the monetary policy rate. And interest rate, as I said, is influenced by many other factors like the reserve requirement of the bank and many other factors. So what does all of this tell us about the real estate industry? So going forward, we should expect mortgages, the interest on mortgages and other forms of construction finance to be cheaper. It becomes cheaper for people who want to take mortgages to acquire homes and all that. Also, low interest rates, just like inflation, also signals a healthy and stable economy, which is conducive for investment, or it attracts investment. So just like how low inflation will attract real estate investors, we should expect low interest rates to also attract real estate investors because it signals a stable economy. The next indicator we should talk about is exchange rates, because you all know how the real estate industry has been dollarized. Every developer is selling their properties in dollars, and we all can bear testimony how the cedi has behaved against other major trading currencies like the US dollar. So as at November, it seems the cedi has appreciated against the dollar by over 30%, which is positive news for the economy. So all of these positives seem to build some momentum for the year ahead, even a stronger economy for the year ahead, which will attract investors, and of course it includes real estate investors. So we should expect optimism for the real estate industry going into the year 2026. Now let's talk about policies, government policies. So in the 2026 budget statement, the minister announced several policies and initiatives the government intends to introduce and implement across the different sectors of the economy to impact the several sectors and industries in the economy. And I've been able to identify some of these policies that I believe have some direct impact on the real estate industry. So the first one I'll talk about is on taxation. So the minister announced that the government plans to reform our VAT regime going forward in the year 2026. And with that, the effective VAT rate, value added tax, will reduce from 21.9% as it is now to 20%, because the National Health Insurance Levy, NHIL, and the Get Fund Levy, which are currently charged on the base VAT rates, the base 15% VAT rate will be separated. In addition to that, the 1% COVID levy, which was introduced, I think, in 2021, will be abolished. And as a result, the VAT rate, effective VAT rate, will reduce to 20%. So this is good news for businesses and also consumers, right? But what does it mean for the real estate industry? So going forward, real estate developers and also construction companies should expect less tax burden, VAT burden on the building materials they purchase, and they should expect that this will bring some marginal reduction in the prices of the building materials they buy. Perhaps this may even be insignificant, but it is what it is. Next is also for real estate developers. So real estate developers are professionals or business people who build properties and sell. And with the properties they build and sell, they are supposed to charge a flat rate VAT on the properties they build and sell. So in Ghana, we have two types of VAT. So we have the standard VAT, the input output VAT that we all know when you buy goods from a shop. Then we also have a flat rate VAT. When real estate developers are selling their properties, they are supposed to charge this flat rate VAT on the properties they build and sell. And this flat rate VAT includes the 1% covered levy. Now that this has been abolished, it means that home buyers will be relieved of this tax. So this is bringing some relief to home buyers. Also, for landlords who rent out commercial buildings. So commercial buildings are like offices, warehouses, and what have you. They are supposed to charge this same flat rate VAT on the rent, and this includes the 1% covered levy. So now that this 1% covered levy has been abolished, it means that there will be some relief to tenants of commercial buildings. So these are some of the tax updates that I think will have a direct impact on the real estate industry. The next policy I'll talk about is on land. So we all know how land is instrumental or its importance to the real estate. So the minister announced that the government is planning to launch a program they call the Comprehensive Digital Land Administration Reform. And this is to allow us as citizens or landowners, land buyers to verify, register, and also do transfer land documents online. So we are moving from the manual system that exists now to a more digital system. But I think there's something already like this in place. But perhaps this is to improve upon the system because there are so many challenges with our land administration system. And this is good news for the real estate industry, right? But the government is saying that they will allow the Lands Commission to retain 100% of its internally generated funds to be able to support this. The next policy I'll talk about is on road infrastructure. So we all know how roads opens up places for development. And the government has an initiative they call the Big Push Initiative. It's the intention or the plan is to spend, they said they want to spend $10 billion over the period of this current president's administration, the 4-year period, on our physical infrastructure. So roads, bridges, ports, and what have you. They want to revamp our fiscal infrastructure to spur economic growth. So for the year 2026, according to the budget, the government has allocated 30 billion Ghana cedis for this Big Push initiative. And there's an interesting flagship project under this Big Push initiative. So the government is saying they are going to construct an Accra to Kumasi expressway, which will begin from the Greater Accra region through the Eastern region to the Ashanti region, passing through towns like Adeso, Asamankese, Achimota, Ofuase, Bosontwe, then to Kumasi. Then later it will continue to the north. It will have interchanges, service areas, and what have you. He said it's a Class A expressway, and this is very interesting. So what this means is that this is a completely different route from the current Accra to Kumasi road we know, which goes through Nsawam to Suhum to Nkoko to Konongo to Edreso. And I've been wondering why won't the government rather expand the current Accra to Kumasi road we have? But that's the government's decision. But what does this mean for the real estate industry? So going forward, we should expect appreciation in land and property values in the towns where this expressway will pass through, especially the towns close to Accra. So for instance, Adeso is close to Accra. It shares a boundary with the Greater Accra region. So we should expect the urban sprawl in the city of Accra to extend to areas like Adesso. So Adesso become like the new Kaswa or Insawum, where it becomes like the transition point between the Greater Accra region and the Eastern region. So fingers crossed. But the Accra to Kumasi Expressway is not the only road, or it's not the only infrastructure projects, road infrastructure under this big push initiative. So the government is planning on constructing several roads under this big push. And as I said, roads opens up places for development. And so going forward, we should expect more real estate investments across the country where some of these routes will pass through. Now let's talk about agriculture, because I consider agric as part of the real estate industry because it's all about land, right? So the government has a policy on oil palm cultivation. They call the National Policy on Integrated Oil Palm Development. And the plan is to cultivate 100,000 hectares of oil palm plantation. So this policy has a 6-year window from 2026 to 2032. And the idea is to reduce our reliance on few cash crops like cocoa and diversify the economy by adding additional cash crops like oil palm, because there's an opportunity in oil palm. Also, the government also is saying that every year we spend over 200 million US dollars in forex to import crude palm oil. So this is also intended to protect our forex reserves. But you know that oil palm is a perennial crop. This means that from cultivation to harvesting takes several years. And because of that, the short-term financing may not be feasible. Short-term financial available may not be feasible. So because of this, to address this, the government will partner with the World Bank to establish a 500 million US dollar finance window. And so for investors who are into agric or who want to diversify into agriculture, there's an opportunity in oil palm cultivation that you may explore. So these are some of the things I was able to pick from the 2026 budget as the minister read to Parliament that I believe will have some impact on the real estate industry. Perhaps I was not able to catch and exhaust all, but the caveat here is that a budget is a plan and the real test comes with its implementation. That is where the rubber meets the road. So in implementing the budget, the government may fall short of its targets, meet its targets, or even outperform its targets. All of these scenarios are possible. So let me give an example to demonstrate this. To achieve all the things the government said they will do, the government is projecting to raise 268 billion Ghana cedis in revenue from its various revenue sources, taxation and what have you. The government is also planning to spend 302.5 billion Ghana cedis in expenditure. Meanwhile, if you look at the year 2025, as at September, how much the government had planned to raise in revenue as of September 2025, the government is 4% below that. It's the same for expenditure. The government is 15% below that. So this means that implementing a budget is not the same as drawing the budget. The implementation takes some effort to do. But on the flip side, we've seen how the government has outperformed many of its macroeconomic indicators. So as I said, both scenarios are possible. But for the year 2026, we keep our fingers crossed and hope for the best for Ghana. So I hope you've learned something from this video. As always, don't forget to like the video and share to others and subscribe to the channel. Thank you for watching.